how to deal with overtrading. Stay tuned. We're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to talk about overtrading, how to know if you're overtrading, and how to deal with it. So there's usually a couple of reasons why most people will overtrade. Number one, they're impatient. And number two, they feel a need to be in the market. So this comes back to one of the things I talk about between separating the amateurs from the professionals. The amateurs are worried about the excitement. They're worried about the thrill. They're worried about winning, they're worried about making money, and they're worried about being right. Professionals are focused on risk management. They know they have a job to do. They've got a trade system that they manage or they execute, and they know that their job is to manage their capital, and they have a reasonable expectation based on that process about their returns. So they don't have an attachment to any individual one trade. They're focused on the process of managing their capital, managing their risk on each position, and executing that system flawlessly. And oftentimes with overtrading, two things are the trade setups that you're taking in your system. So a lot of times overtrading, if you go back and analyze your brokerage account at the end of the month, maybe if you're overtrading, the bulk of those trades might not even be in your trading system. And if you haven't written that out concisely and simply, then maybe you should do that as well. So you might be trading on 5 minutes and an hourly system and an end-of-day system. I've done all that. And so oftentimes when you're trading randomly, it's very hard for you to reproduce any results, but it also emotionally disorients you, and you start to take on more risk per trade than you're actually taking off in profit. So you might be risking $1.20 to make $1, and you may only have a 50% hit rate. So it's important that, again, coming back, the professionals know they look for asymmetrical risk reward opportunities. They're emotionally oriented in terms of the capital that they're exposing on each individual trade, and they have an asymmetrical risk reward so that when they're wrong on these trades, they don't care. They're not attached to the outcome, and they know that when they get their winning trades, those winners wipe out their losers. So it's really important. I talk about this in my 7-step daily routine for high-performance traders. Building a playbook is part of the 7 steps. It's important to go back, pick out your 1, 2, 3, 4 best trade setups, build a playbook of those on the time frame that you're trading, and really hone in specifically on knowing that intimately so that when they present, you can execute your entry signal, your stop loss, and manage that trade accordingly. And again, you've got an asymmetrical risk reward opportunity so that when you go back, you're focusing on those high quality trades rather than just randomly wanting to be in the market because it's moving and you feel like you're missing out and you need to be part of that move. You will lose big if you continue to overtrade. It is only a matter of time. Every time you expose your capital to the market, you are taking on risk. So hypothetically, the more you trade, the more likely you're going to take losses because you're taking on more and more risk more frequently. And if you can't have a result that shows a positive expectancy consistently based on the same triggers and targets, it's going to be very hard for you to show consistent long-term results with your trading. So focus on your 3 or 4 best trade setups. Stick with one time frame. Stick with, fewer instruments if you need to in the beginning, or if you're managing a certain basket, stick with those instruments. Focus on those best trade setups, and know, if you've gone back and you reviewed, you've back tested some of your results, you've built a playbook, you know that maybe those best trade setups might only give you 3 or 4 really high quality trades every week, depending on the time frame that you're trading. So I would encourage you to really hone in and focus on those, reduce the number of trades that you're taking. Sometimes it's better to be out of the market and be neutral, to have a clearer perspective and not be emotionally invested in a trade that's not going anywhere, because it clouds your judgment on being able to look at the markets and have a clear understanding of whether or not you've got a trade signal presenting. So again, stick with the trade setups that are within your plan. Focus on quality, not quantity. When you understand that, discipline and patience, all those things are irrelevant because now you're focused on managing your risk capital and you're looking for asymmetrical risk reward opportunities. Hopefully you got some value out of today's video, traders. Focus on quality, stay disciplined, focus on being a professional, and keep getting better. Have a great trading week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.